Greetings. Welcome to this podcast, and the title is FinTech Disruption: How Financial Technology is Changing Banking. Banking will never be the same again. Picture this: it's the year 2008, and you're sitting in a bustling coffee shop, laptop open, trying to figure out how to transfer money to a friend who's halfway across the world. At the time, sending money internationally meant using complicated forms and waiting days for the transaction to clear. Now, fast forward to today, sending money across borders is as easy as sending a text. Enter the world of FinTech, where financial technology has not only streamlined payments but is revolutionizing the entire banking system. Take Sarah, a project manager at a tech startup. Last month, she tried using a new app to pay her bills, something she never thought possible before FinTech took the scene. Within seconds, she had paid everything from her utilities to her subscription services, all through one simple platform. No bank queues, no hidden fees. Just seamless transactions. Sarah's story is one of many that reflects how the financial tech disruption is not just changing how we bank, but how we live. Let's take this to the coffee sandwich break. Imagine you're sitting in a typical workplace lunchroom, discussing with a colleague who's recently switched from traditional banking to a completely digital banking platform. She explains how, with AI-powered budgeting tools, she's now able to save more while spending smarter. In seconds, the bank app analyzes her spending patterns, provides tailored financial advice, and suggests how to manage her wealth. It's no longer about banking hours but banking anytime, anywhere. This is the promise of FinTech, making money management more personal, more accessible, and more efficient. Let's rewind to 2015. Sarah, a tech-savvy entrepreneur, was one of the first to try out a new digital wallet app in her city. She'd never thought much about using an app to make payments until she had a lunch meeting with a potential investor. She was about to pay with her credit card when the investor pulled out his phone, scanned a QR code, and made a payment with a few taps. Sarah felt a little behind the times, but later that afternoon, she downloaded the same app, quickly set up her account, and realized how much easier it was to transfer funds, pay bills, and even buy her morning coffee, all from her phone. Fast forward to today, and digital wallets have become the norm. What was once a novelty has now changed how millions handle their finances. Imagine sitting in a boardroom, discussing how to secure your company's transactions. Everyone's aware of the risks involved, and the tension in the room is palpable. Suddenly, someone suggests blockchain. The skeptical looks are everywhere. After all, it's just a techy buzzword, right? However, a few weeks later, after piloting a blockchain solution for payment tracking, they were able to identify discrepancies that would have gone unnoticed in traditional systems. Blockchain had provided transparency and an immutable record that safeguarded their financial integrity. That moment changed the trajectory of how they handled their financial operations, highlighting blockchain's ability to transform business practices in real time. It was early morning when John, a 35-year-old financial planner, opened his bank app to check on his spending for the month. He hadn't been keeping track of his expenses, but he didn't need to worry. His app had already done the job for him. Thanks to an AI-powered budgeting tool, it categorized all his transactions and highlighted areas where he was overspending. John didn't have to manually input anything or spend hours figuring out his finances. The app also suggested where he could cut back and even provided personalized tips on how to save for his dream vacation. This is the power of AI, turning what was once a complicated, time-consuming task into something automated, intuitive, and far more efficient. In rural India, Rani, a farmer, had always kept her savings under her mattress. She didn't trust the local bank, fearing high fees and long wait times. But one day, her son introduced her to a new mobile banking app that allowed her to save and transfer money right from her phone. She was skeptical at first, but after a few weeks of use, Rani found herself more in control of her finances than ever before. She could send money to her family in the city, pay for groceries, and even save for a future investment, all without leaving her village. Mobile banking had solved an age-old problem: access. For millions of unbanked individuals like Ronnie, FinTech wasn't just a convenience, it was a lifeline. Back in 2017, Tom, the CFO of a mid-sized tech company, was struggling to keep track of multiple financial systems. His company had grown rapidly, but they were using old-school spreadsheets and manual processes that were slow and prone to error. When the company adopted a cloud-based financial management platform, it was a game changer. With automation tools that tracked everything from invoicing to payroll, the company's finances became transparent and easier to manage. What used to take Tom hours now only took minutes. The shift to FinTech didn't just streamline their operations, it also saved the company thousands of dollars in errors, penalties, and inefficiencies. Viewers' FAQs. What is the impact of FinTech on traditional banking? The rise of FinTech is changing how we think about banking. With the introduction of digital wallets, peer-to-peer payments, and blockchain, traditional banks now face competition from agile, customer-centric tech startups. FinTech allows customers to bypass long queues and high fees associated with traditional banks, providing faster, cheaper alternatives. How does blockchain technology disrupt banking? Blockchain technology is revolutionizing banking by offering a decentralized way to process transactions. It ensures transparency, reduces fraud, and allows for faster transactions. Blockchain's impact on financial institutions is profound, as it shifts the power from centralized systems to peer-to-peer networks. Can FinTech improve the accessibility of financial services in developing countries? Yes. One of the most significant advantages of FinTech is its ability to reach underbanked populations, especially in developing countries. Mobile banking, microloans, and peer-to-peer payment systems make it easier for individuals who have never had access to a traditional bank to engage with the financial system. What are the security concerns with FinTech? While FinTech offers many advantages, it also comes with security challenges. Cybersecurity remains a top priority for FinTech companies, as protecting sensitive financial data from breaches is crucial. Encryption, two-factor authentication, and blockchain-based security are some ways FinTech is addressing these concerns. What does the future of banking look like in the age of FinTech? The future of banking is expected to be more digital and customer-centric. With AI, machine learning, and predictive analytics, banks will offer personalized services that cater to the individual's financial habits. This trend is expected to expand globally, with FinTech being a crucial player in reshaping how people manage their finances. Tips and best practices. Stay ahead with AI-powered solutions. Integrating AI into banking systems is becoming a norm. Whether for chatbots that handle customer service or AI-driven analytics for investment management, the possibilities are endless. Make sure to take advantage of these tools to enhance financial services. Embrace digital payments. Encourage your organization to explore digital wallets and mobile payments as viable options for quick, secure transactions. This not only enhances customer experience but reduces overhead costs. Build trust through transparency. Transparency is key in FinTech. Customers need to trust that their data is secure. FinTech companies should prioritize privacy policies and make them accessible to users.